Hello and welcome to the Get Sustainable show produced by ESBN in partnership with Green Europe Day and Livestream Studio. Our guest today is Aneta Rusiniak, Director ESG Europe for Invesco Real Estate, part of the global investment firm Invesco Limited. At her current role, she is responsible for ESG strategy, implementation for European real estate portfolio. Glad you could join us today, Aneta. Thank you very much for being on the show.
Thank you for this introduction, and I'm also happy to be here.
Now, Invesco is a global investment management company, a constituent of the S&P 500, employing 8,400 people in over 26 countries. Invesco Real Estate has a strong presence in Europe with over 13 billion euros of assets under management. So in a nutshell, how has the real estate investment landscape changed over the years as a result of introducing ESG reporting process? And how important are sustainable business practices in the real estate investment, in the decision-making process?
Yep. Invesco includes ESG in their practices for already many years. It's actually started 15 years ago with the global Invesco Real Estate Green Program. We are submitting to global benchmark GRESB for already 10 years with our funds. But of course, it changes and evaluates during the time. First, more focus was on building green building certifications program, starting with data collection. Now we are moving more into more strategic targets and objectives. This is the natural evolution of changing strategy due to the rising pressure of our investors, also changing global environment, interest from our stakeholders, and of course, legal compliance. Rising ESG regulations is also forcing us, but also our implication of our actions in terms of more strategic, measurable objectives and KPIs. However, when I joined Invesco, which was already over 7 years ago, as I mentioned, ESG was a part of our actions, our activities. But it was somewhere on the agenda. Everyone knows that we have GRESB campaign, we have GRESB submission, we are collecting some data, but it was not something really that we were focusing on our daily activities. And then it rapidly changed. Over last 2-3 years, the change is really visible. And actually, I was participating in one of our all-staff meetings, which was fortunately in person before a pandemic. And I noticed that our focus is really on ESG. We spent like half of the meeting discussing ESG. It was the first topic. It was really important on the agenda. And then I thought, wow, the change is really happening.
So you can see that the company is changing and that the environment, the business environment is changing. It's interesting to learn that ESG is always, or maybe not always, but for a long time has been a part of the business, but only recently has moved into the forefront and become core to the decision-making process.
Exactly. But what I also want to force and stress that our on-the-ground initiatives were always present with our asset management teams. So this ESG initiatives, which were not called ESG but the theme, but involving our tenants, building communities, engaging all the stakeholders, that was in our DNA from the beginning. And then it results in building certifications, in the benchmarking that we are achieving. But it's not that it happened recently. It was always there, and we always believe that we need to integrate our communities, we need to work with our tenants, we need to build this wealth and healthy environment for our buildings, and that's what's happening for
because each of
years.
these activities spark new activities elsewhere, so it's an interconnected web of activity. The role of collecting and processing data is extremely important in determining the state of a business when undertaking investment decisions. So what data do you collect and analyze during the acquisition process, and what challenges do these bring when developing a strategy for growth in line with sustainable business practices?
ESG data, as you said, it's a foundation of ESG strategy, but it's also a big challenge. So maybe in a short briefing, what we call ESG data, we can have qualitative and quantitative data. Quantitative data is mainly utility consumption that we collect from our buildings, and it can be then shared by landlord controllable data, so the data we collect from common spaces, and tenant controllable data, the data from space which is occupied by tenants, and then we can also divide it by data by the utility consumption that is produced on site or purchased externally. And the biggest challenge here we have with the data collection, which we need to rely on third parties. So we need to rely on the third parties like property managers who are collecting the data for us, uploading it to the platform. But this is the change that is happening for the whole industry. So it's not like they hear it only from Invesco, but they have this request from all of the investors. So the quality of data collection is significantly improving. We can see that. But then we have tenants. And if we are not in the possession of their data, here is the challenge how to collect it. We need their consent, and of course we are building this awareness. We start with the communication, education. We are introducing green clauses to our lease agreements, but this is a long process. Okay. And some companies, even though they are stating they have ESG very high on their agenda, when it comes to sharing data, they say sorry, no. So this is something that's a challenge for everyone in the industry. It's not only us. But when you say what data is needed for the acquisition, this is also a question about the availability of data, because we would ideally like to have the data which we own during the processing of the assets. So we would like to have all the utility consumption, would like to have energy performance certificates available, BREEAM certification, and before we submit the offer, before the due diligence starts, this is a very low chance that we will get it. I mean, the industry is just not there yet. So we cannot really say how the asset will be will imply to our strategy in a zero pathway unless we have this data. And then the another thing is during the due diligence, when we have access to more data, and we hopefully can assess the utility consumption of the building, and we have some findings, we would like to propose as a strategy. Would like to discuss with the seller, like it's happening during the technical due diligence. But again, it's still, the industry is still not ready to treat it the same way. So okay, you can assess your sustainability strategy, you can look at the data, but the outcome probably will not be taken into account in the negotiations. So that's something which is for sure challenging at the moment.
So I guess one of your goals is to build a platform, a collaborative platform, where all the stakeholders share their data sets in order to bring out the best learnings for all of them.
I think what is important to first of all have internally one place, one source of information, that platform where you store this data when you try to monitor it, perform KPIs, measure and use it, and then to be able to look at your strategy, how it's performing. So this is right now what should be happening for everyone. And the next stage would be to get this transparency on the market. Okay. So I wouldn't say we need to have one platform to share the data, but at least to have access to the data from others if we need it for our assessment during the due diligence.
Very interesting subject with a lot of potential there, I guess.
Yeah, definitely.
There is a view that building a sustainable portfolio is a good strategy for long-term investments. Should an investor bet on businesses with strong ESG results regardless of the length of the investment, or is this less relevant when looking for faster returns?
This is a very good question, but also quite difficult to answer, because as everyone knows, net zero strategies, ESG strategies target very far away dates. So in most cases it's 2050, sometimes earlier 2040, but it's a far away. So many of our fund managers are asking, okay, we are talking about 2050, we will not hold our assets until then. Yeah. So why we should really focus on our resources right now to look at the strategy which will not happen? Okay. And the answer is quite easy, because we of course we are not gonna to keep our assets until 2050 or 2040, or probably some of them even not until 2030. But we are gonna to sell it to someone, and that someone will have similar target strategies like we have. So they would like to see how the buildings that they are gonna buy are responding and responding to their strategy and their targets. Yeah. So they would like to check the same what we are checking right now for our portfolio, and they would expect from us, or it would be helpful if we can provide it with them with the clear pathway and strategy going forward for the assets, what we are planning to do to make sure that they are meeting the targets, which are, as I said, similar for everyone. We have the same goal, net zero, or earlier or later, but it's basically the same. So if we are able to show them what we have already done to improve the assets and what is the strategy, what is the plan going forward, that will help to perform with a better returns and expected returns and sell the assets like we would like.
Yeah. So investing in assets that haven't got the future built into the asset is a risky decision, potentially, because you have to sell on the asset after its investment term.
Of course. But also what is important to remember that we are talking about targets for 2050, but we are assuming it and analyzing based off the information today. And we don't know what will be in 30 years. We don't know what will be in 5 years, but we are basically assuming it on the technology which is available today, on the information on the energy mix for country grids, which is as of today. We have the estimations how the countries are going to decarbonize. There are some already industry standards tools which are helpful to assess how the asset decarbonization pathway would look like even without our initiatives, just because the countries have the strategy to decarbonize and include more renewable energy in their grids. But this is all based on the information and assumptions as of today. So we shouldn't be saying like we have a plan for next 30 years, you need to spend this and this capex this year and then you can get you can be net zero in 2050, because it's not going to happen. You need to have short-term and medium-term targets to be able to actually work on the long-term strategy efficiently and successfully. You need to just assess it in the short-term periods, have a plan, act now, do something, and then adjust and monitor. And that's the only way how to be successful.
Finally, as ESG is not a separate activity and must be woven into the activities of all the teams and all the areas of business, could you please specify how does it weave into the real estate life cycle? What processes have to be implemented? What decisions have to be made? And how do you know you are heading in the right direction?
Okay, that's a very complex question. So starting from the very beginning, it all starts in the investment committees when we want to buy asset. And I already briefly explained that we would hopefully like to have data to assess that, but we have our internal ESG due diligence checklist. We look at the assets that we are going to buy, how it will respond to our sustainability roadmap, our ESG strategies, our targets. And it's also similar with the projects under developments, as we are also involved in some JVs with developers where we all together construct the new assets, and we are providing our partners, our JV partners, our project managers with a guidance development brief, which includes our minimum standards, how the developments should be completed to meet to our targets and be able to respond to our roadmap. So that's the first part. Then it evaluates together with the portfolio management and asset management when the asset is already acquired. Each asset manager needs to perform the ESG strategy for their assets, needs to propose on the annual business plan actions for their assets. Then they discuss it with fund managers. And we come up with the strategy for certain assets and the whole portfolios, and how to make sure that it's that we are heading into the right direction. I mean, what we can do is to set up a roadmap and to monitor it. So first of all, what we are doing is like a screenshot of our portfolio in terms of where we are on a very high level with our decarbonization strategy and with our net zero pathway for all of our portfolios. We are spotting the most risky assets in terms of heading to the net zero, and we advise our or we start to look at the net zero audits for these assets. It's not like every asset should be performed with the net zero audits. It also depends what asset it is, how many data we possess, and also what is the holding strategy of the asset. Then we can propose different actions if we are going to sell it within 1 year or 2 years. But generally, we see that the net zero audits, which are more and more appearing on the market, are very valuable and practical tool to plan and make sure that we are heading into the right direction. So when we receive the plan with actual capex and recommendations how to work with our assets to achieve net zero, this is something what we can then implement in our business plan, discuss with fund managers, and work on it. But what is also very important to remember is that we should do it step by step. So first we look at the quick wins. We look at our assets and we think, okay, what we can do with low or no cost initiatives. It's again helpful to have this net zero or energy audit, because that will be the answer for that question. And then we optimize our assets with these initiatives to the maximal possible extent. And then we start with the capex investment based on the recommendations we have from this net zero audits or from our local teams, which is also very valuable source of information. And when we are sure that as of today we cannot do anything more about the assets because it's physically, technically not possible to improve it more, or financially not sustainable, then we can consider green energy as a fulfillment of this net zero strategy. So obviously we prefer on-site renewable energy sources, but it's not always possible to produce energy on-site. Then we have the option to procure green energy, and at the very, very end, offsetting, which should be always stressed that this is just the last resource for any emissions that are not possible to be reduced in a different way. So I think that's important to remember, that the process is involving everyone in the company. So as I mentioned, it starts from the transactions, fund management, asset management, but everyone needs to work together. We also need to work together with research, who is working on our climate risk assessment and implementing it in our investment management strategy. We need to work with our sales team, who are talking to our investors, with client portfolio and product management team. So everyone works on the same goal, in the same sort of way. So thank you very much, Aneta.
It's a very eye-opening and interesting conversation, but that's all we have time for, I'm afraid, today. So we are always on the lookout for inspiring ESG stories. So if you'd like to share your recent achievements or talk about your future plans with a wider audience, then please get in touch with our team at contact@greeneuropetoday.com. Please remember to visit our YouTube channel and subscribe to receive our latest releases. Thank you very much for watching. See you again soon. Goodbye.